All right, AJT Jungle. We are going to continue with our price action and technical analysis program. As you know, I try to teach this to you every day, as we're trading live. That's the best time to learn technical analysis. Now, both technical analysis and price action, but more importantly, price action, because the price action, again, is telling us exactly what's happening at the moment. There's no delay to it. This is real-time information, and it's what we can use to help us make the best trading decisions possible. But I'm breaking this down and just teaching you small elements because it's simple once you get it, but there's a lot of little elements that you have to learn and master that are the fundamentals. It's just like math. It's hard at first to get these fundamentals down, but then once you get them, it's easy. It becomes second nature. It's, trading is the same way. You learn the fundamentals. Once you get it down, it becomes like second nature. So, and then when, as I'll tell you in a minute, looking at patterns, what happens when you're learning how to identify patterns on a dead chart, you're going to look for that pattern over and over and over again. And it's not going to be the same. It's not going to be perfect. It's going to set up differently. They're going to look different. And so you have to be able to read price action in order to identify when these patterns are going to occur or starting to occur. Because if you wait until they're done, oftentimes you're too late and you miss out. So that's what we're going to be talking about today. I think that's a little bit too soon. Hold on. I need to move that. I didn't realize I had that. That early in the presentation. That's not right. I want that to be at the end. Alright, now we're right. So, candlesticks. And the reason why we spent so much time on it is they're the basic visual component of our price action chart. Understanding what they're telling us is crucial to our ability to enter and exit our positions at the best time. That's why it's not about learning patterns. The patterns don't mean jack if you don't understand what the candlestick is telling you, what each candlestick is telling you. They come together to tell you a story. And you've got to be able to interpret it. The relationship between the four price levels that make up each candle, they have strong implications about the future direction of price. All right, so the open, close, low, and high. That's why it's important to understand that. You'd be surprised how many people that's been in trading, that's been trying to trade for even a year or two, did not understand what the basics of the candlestick is telling us. And these candlesticks and their patterns are often the most accurate indicator of the balance between buyers and sellers. Okay, basically we're looking and we're looking to take advantage of and find who's winning. We don't want to be in the fight. We're the little fish. Now if we're sitting in the middle of the fight, we're likely to get eaten. Okay, we're likely to become fuel for that fight. So what we want to do is let the fight go on, and when we start to see who's winning, when the chart starts to tell us who's winning the fight, that's a direction that we want to trade in, providing that there's enough room for us to make money before it gets to the next battlefield, which will be the next level of support or resistance. That's basically all we're doing here. So again, I was surprised how many people did not understand this and did not know how to actually interpret these candlesticks. So that's why we covered this in the beginning, why we talked about each candlestick and what each candlestick is telling us. Okay, it's very important that you understand it. It's like when you're learning how to read or write. Let's say you're learning how to write. And in order for you to put words together, you need to learn what each individual letter stands for. What sound it makes. What happens when you put these two letters together? Does it change? Does it make a different sound? All of these things we had to learn, and we don't think about it because we were so little when we learned it. But if we didn't learn it that way, we might not have ever learned how to read or write. And there's still people today in this country who cannot read or write because they did not learn or grasp the fundamentals. They're surviving in this world, but they didn't get the fundamentals. And this is the same thing. These are the fundamentals of being able to read price action and put patterns together so that it can indicate to us which way we're likely to go in our trade. So once we get through all of that, then we can get to the patterns. And we're going to be talking about this here in the next couple weeks, and so that it helps us be able to read this price action. Now, I'm going to be honest with you. After 9:45, 10 o'clock every day, the market's pretty much done. If you don't make your money, price action is going to tell you, hey, we're just trading sideways. We're stuck in between the 5-minute opening range, or we're stuck in between the pre-market high and low. That's that kind of thing. So there is a reason. I didn't do this just for the hell of it. There is a reason why we're doing this, and we did it the way we did it. And if you didn't get it, you've got the recordings of the meetings we had. You can go back and go through it. You could always shoot me an email or schedule a session so that we can work on it. All right, so today we're just going to talk about the long wick patterns. Okay, because typically these are what we're seeing before reversals, before price changes direction. And sometimes if we have enough room, reversals can be very powerful, especially a stock that's run up really high. So the long wicks indicate areas where price has moved quickly in the opposite direction of the initial move. Okay, so what this thing does, or what it did, the stock opened and it actually sold off. It was selling. Then all of a sudden it ran into some buyers. And it got aggressively bought back up. Aggressively bought back up. And that's what we're seeing here. All right, so for example, a long wick below the open this tells us that the sellers were able to push the price down, but the buyers came back in and bought it back up and took it higher than the open, which means if we are going down, if we're selling off and we see this candle at the bottom of the range, it's likely to go back up. That's what we're looking at. So once this power struggle between the bears and the bulls is over and we have a clear winner, it may anticipate or initiate a reversal. So again, if we're going down, this could tell us that we're going to start going back up. Or if we were going back up and we ran into some resistance and it sold off and then it got bought back up and we're above the entry, it's probably going to continue going in the direction that it's going. Because I know you've heard of big funds that they're buying a ton of shares, and what happens, they don't get their order filled, so they need to artificially bring the price down to where they're in their buy range, and then they can start buying back up. And you see this. You don't know if that's exactly what's happening, but when I see this, it's more likely, okay, that's what happened, especially in the middle of an uptrend. I see this in the middle of an uptrend. That's kind of what I'm thinking. Reversals can be a great time to enter a trade if you missed the initial move. Let's say you missed the initial move down and you get this candle at the bottom. It could be a sign that the price is starting to turn. So if you're short, you can take your profit and wait for this to settle again and see if you get another entry. Okay, so it can tell you anything, and this is why it's very, very important that you pay attention when I'm trying to teach this stuff as we're trading. This is what we're looking at. This is what I see the price actions telling us. It's very, very important. All right, so if a long wick tests a major support or resistance level, it may confirm that traders are trying to defend that level. Remember, I always tell you, look, this level is being defended. Price action is not getting under it. So we're going to look at an example of that here in a minute. But hammer candle, we call these candlesticks with a small body that has a small range from open to close. Man, this thing's driving me insane. Alright, so here you've got the hammers at the top, and then we've got what we call inverted hammers. These kind of tell us two different things, or they can tell us two different things. But in each case, when we see a hammer candle, we need to pay attention. Okay, this is like a warning sign. Look, something could be changing here. The wind could be changing directions. You may need to adjust your sail. There's some things that could be happening that you have to be aware of. But that's basically what you're looking at. Some hammers will have a little wick protruding through the other side. Some may not have any wicks at all. But a traditional hammer is going to have the body at the top. An inverted hammer is going to have the body at the bottom. So if you have a hammer like this occurring at the bottom of a downtrend, it's long wick. Remember, it tells us that the bears that were selling off ran out of steam and it gets bought aggressively back up. To me, that tells me, this is telling me that somebody artificially brought it down so they could start filling the rest of these orders. But again, you don't know for sure. You really don't. We're just kind of guessing unless you're sitting next to the person that does it. And the reason why I've been telling you these things, and I've said these things for the last several years, my mentor is a whale. And I've sat next to him and watched him move price so that they can get filled. So I know what happens, and I know what the candle looks like. But again, unless you're sitting next to that person doing it, you don't know if that's the case or not. So it's not me assuming that happens. I know for a fact that happens. As a matter of fact, several years ago, Jim Cramer actually, in an interview, admitted that when he was running managing a firm, they did that. That was what they did. So, again, these symbol or can symbolize a reversal. Now, I'm starting with this because this is, we've talked about how to identify the trend continuation once we've had the opening range move. This is going to tell us, are we looking at a reversal, or is there a potential for price action to reverse? All right, so here's an example of a hammer candle on the bottom. Again, this could be green. It doesn't have to be red. I mean, the bottom doesn't have to be red. But this is kind of telling us that, hey, we dipped down at the bottom of a range. It got bought back up. Now, we haven't closed back above it yet. But you look at this candle does not make a lower low. It actually makes a higher high, which triggers an entry for our reversal. Right there. That's what we're looking for. And you see this thing reversed. We hit resistance here, a little pullback. These are the things that learning price action will keep you from getting scared out when this happens. Too many of you, when I look at your trades, too many of you are bailing out here. You're getting scared because you get a little candle going against you. Some of you would bail out on this candle, because it goes up and comes back down. It goes up and comes back down. You have to wait for the next candle to confirm what you're seeing. When you see this candle, it's saying, yeah, okay, take notice. I tried to go up, but I got rejected, so I'm selling back off. Okay, let's wait and see, because look at what happened here. This candle, it still made a higher high. It closed above the high of this candle. It's telling you, I'm not done yet. Okay, I'm not done. So you read the next candle here. This candle, we pull back, but we have this, you could consider a reversal candle, but it really isn't, because the wick is it's either the same or shorter than the body. So this really isn't a reversal candle. Just because it has a wick to the bottom, it's not longer than the body. So you still wait for the next candle to print. Look, bam, we make a higher high. This thing's continuing to go. The price action is going to tell you when it's time to get out and when it's time to stay in the trade. That's what the price action is going to do. So one of the reversal, yeah, I think that's Tesla today. One of the reversal candles that we look for is also an inverted hammer, and typically we see this when the stock's going up. So that's when we see the inverted hammer. It's typically when the stock's going up. Now, it's not 100% absolute, but we're looking for the majority. We're looking for the majority of times. The majority of the times, this is symbolizing a change in direction. Your entry was down here for a short. Yep, but look at what it, and this is why you want to be able to read price action and kind of zoom out and look and see what's happening here. Because this right here is yesterday's close price. And we dipped down 1, 2, 3, 4 candles. And then this one opens. We still don't have any idea if this is going to close. We did make a lower low, but we still didn't know if this was going to close. So the thing to do here is, yeah, you can assume once it takes out the low, you could get in and assume it's going to go. But when it puts in this candle, that's when you probably want to reach for the oh shit handle and say, hey, this thing might be turning around. Okay, this doesn't mean that it's gonna do it. What it means is, hey, pay attention. I might be moving. I might be turning around here. So you pay attention to it, and if this makes a lower low, then yeah, you're probably coming in. But if this doesn't, confirm it, you're probably coming back. And that's what you saw. But here's the thing, in the heat of the battle, and you're just looking for a trade, oftentimes, we ignore this. We ignore it. We say, oh yeah, finally, 4th time it broke through. That's the charm. No. But yeah, it's good if you're going to be aggressive, but you got to pay attention to, if this tells you, hey, it's not going to work, you got to be humble, take it off and wait. Because if you got in here, once this candle took out the high, it's time to get out. All right. So the hanging man part of this is just the opposite of like a bottom reversal. We typically see in a top reversal. So this is kind of what we're looking for. Where's the entry on this? Right here. You kind of want it to take out the low of this candle. When it comes down, you want it to take out the low of this candle. So once it took out the low of this candle and it took out the low of this one, you're gone. Some people may wait for this. They like to have two candles, but you know, once you put in a reversal hammer or inversed hammer, and you make a lower low, it's telling me we're coming back in. Oh no problem. This is class. So if you have a question or you have input, you know, by all means, it makes the class more. To me, it makes it more dynamic and impactful. All right, so that is what we're seeing. Now, do I make mistakes reading price action? Absolutely. Do I ignore it? Absolutely. And when that happens, I gotta fix myself. I've got to fix myself. So in this case, this is NVDA yesterday. Now we started this. We started this trade. Boy, I put my foot in it yesterday when I started this trade. I can't say that because it started good. Okay, here was the break. This was the break of the pre-market low. This is a 5-minute opening range low, which I think was a daily level anyway. Once we got through it, I got in, shorted it, got this candle, got the first target. My second target was 850. Okay, this is just being stubborn. Anytime you get a reversal hammer like this, you gotta listen to it. Here, it sold off and came all the way back up, all the way back up above where I got my profit target. This one opened, sold back off again. Almost hit, almost got to 850. I didn't take it off. I sat there and watched it bounce and ended up taking it off at break even. I gave up killer profit because I was, in my mind, I knew more than what the price action was telling me to do. I knew more than what the price action was telling me to do. So, okay, bam, I'm out. Guess what? What happens in your mind when you've made a mistake, it's cost you some profit, and on top of that, this candle came right to my stop and turned around. Look at it. It came right to my stop at break even, and then it, this candle opened and it started selling off. What do you think I did? Without looking at this, without looking at this, hold on, I gotta take this off. It's messed up. But without paying attention to this, after I saw this, what is this price action telling us? Based on what we talked about today, in our session today, what is this telling us? All right, don't be shy. This is telling me who's paying attention and who's not. What is this telling us? What are these two candles telling us? If this one candlestick wasn't enough, what is this candlestick telling us? Well, you say, yeah, the bulls are regaining control. Oh, hold on. I'm sorry. This let me do this. What is this telling us right here? Yeah, the bulls are trying to regain control, yeah. Yeah, we're running into like 850 was a big area on the option flow. Remember? I don't know if you remember us looking at it. 850, that's why I had my target there. All right, so it came down, and obviously we were running into support, right? These candles, when you're selling off and you run into support where you've got a bunch of buyers that buy it back up aggressively, you're running into support there. So this candle, I didn't get out yet because at this point we hadn't come back to my entry, and this candle opened, it never took out this high, but it opened and started selling off. It came down here again. I did not listen to the chart. This is telling us that we're likely to reverse. Not only did I get one candle telling me that, I got two candles telling me that. So instead of me bailing out, taking profit because this told me that, I get mad because it comes back and I re-enter. I re-enter right here. Stupid. But the reason why that happened, I was upset with this. Okay, I let my expectations get to me, plus me not taking it off here. But instead of me looking at this saying, you know what, the bulls are really strong down here, instead of me waiting to say, well, if I get back in, I got to get back in under 850, I try to jump in here. Dumb. I bottom ticked this. If I was trying to bottom tick it, it wouldn't happen. I bottom ticked this candle because as soon as I got in, it got bought back up, stopped me out, and then came back down. So yeah, I'm highly frustrated now. Highly frustrated now. Now, I didn't get in here. This entry right here, all right, wait a minute. Where is it? All right. my eraser here. All right, so right here is where I entered long. But I didn't actually do that. I can honestly blame this on my cat because I didn't realize I was in it. This boy likes to walk across my keyboard. He didn't hit the mouse this time, but he walked on my keyboard, and that was that. So, why didn't I take it off? Because evidently we bought into all of this resistance. But why didn't I take it off? Look at what these candlesticks were telling me. Look at what they're telling me. There's still fight in this. The bulls are still fighting this. They're still fighting this. Even into, we pushed up, we pulled back. We were getting killed on this level. This was a 5-minute opening range high. But once we took that out, my first target was going to be the 50-day move, the 50-period moving average. Second target was the 100-period. It pulled back. It held support again. And then we got to the 200. I was going to town. And then we got in over. I waited until we got over the 10-day moving average. I got in, got one target. It pulled back and stopped me out. But I wasn't here to get back in. And if I was still here, you damn Skippy, I would have got back in this. The price action was just insane yesterday. And this is what caused me to get in it after the market closed, looking for a gap up today, which we did not get yet. Keyword yet. All right, but do you guys understand how reading price action can really enhance our trading? Even though you may make a mistake, if you stay locked in and you listen to what the chart's telling you, you can overcome it. Stop! Okay, that was Mr. Cat there. We're not ready to move on. So, what did we end up with yesterday? After getting nailed on that first one on NVDA, staying locked in and letting the price action guide us, we were able to come back and make a little bit of money yesterday. And I attribute it all to price action. All to price action. All right. Anybody have any questions about what we talked about today? Now, we're going to get into a couple more next week. But I wanted to get into these because these are the most common reversal patterns. These are things that we need to pay attention to, regardless of whether we're going to reverse it or not. Okay, regardless of whether we're going to reverse it or not. These are things that we need to pay attention to. So I'm going to stop the recording But if you guys have any questions, so I can get it uploaded. But if you guys have any questions, just type them out here or email me. Whatever you want to do. But this is just foundational. Okay, understanding what these one candlesticks, this one type of candlestick, the hammer candle, the inverted hammer candle, what it could be telling you.